Now, end of the year, as I mentioned, is a very important time because you can actually do things to reduce your taxes. But once the year is over, it's often too late. So, last week we talked about IRAs, and if your income is not as you expected, that maybe converting some of your IRA into a Roth, so an after-tax IRA, may be beneficial. Now, this week, I want to mention another tip. Now, many attorneys and websites recommend LLCs for small businesses. Now, LLCs may be great because they allow you to not have to worry about a separate filing, but at the same time, LLCs often make you pay a lot more taxes than other forms of organization. So if you find yourself with a single member LLC or even a partnership, now would be the time to see if you made over, let's say, $20,000 to $40,000 net for the year. May make sense for you to convert this LLC into an S corp. Now, this is something that is best discussed with your tax planner or your accountant. And for accountants, right now, the end of the year is the slowest time. So it's a good time for you to reach out to someone and actually make sure that this happens. Not everyone actually knows how to convert LLCs into S corps or C corps or whatever it is. And there are a couple of things that you will need to take care of if that's what you want. But now is a good time to actually review your entity structure and review your entity selection and possibly convert. Now, if you were to convert at this point in time, you would actually have to do a late conversion. And late conversions, not every accountant knows how to do them, but many do. And you have to have some paperwork in place, as well as some possibly payroll and other things. So now would be a good time for you to reach out to a tax planner or an accountant and see whether you can save some money. All right, I'll see you next week.